Hello, good morning. Welcome to another London session. Can you give me a check if you can hear me in the Discord chat? Let me know if you can hear me. Let me know if you can hear me and we can proceed. Or at least if you can see my screen. Alright, cool. Thank you, Marco. You are always around. Good. Okay, we're good to go. So my state of mind update. I'm getting there. I'm not fully there yet. I'm working on my state of mind right now. So what I'm gonna do today is kind of give you like a lesson, if that's okay. Yeah, I'm gonna give you a lesson, and everyone can benefit from that. All right. And then once I finish, I'm gonna spend the next maybe 15 minutes talking about it. And then once I finish, I can go through a few pairs that I have here. And then if you have any pair recommendation, you can send that as well. Right, let's crack on. So what I'm going to talk about today is called market structure. Right, market structure. Now, when we talk about market structure, well, what comes into my mind is in terms of smart money, right? What is the market doing? Is the market going up or the market is going down? Because as you know, the market does not go in a straight line, and it does not go up and then down. Okay, there's always going to be like this weird movement of price going up, and then price will pause and then change direction, and then price will pause and change direction, and then a continuation to the downside. Okay. Understanding the structure of the market is key, because once you understand the structure of the market on any given time frame, you can go into any pair, any time frame, and still understand the flow of the market, the direction that the market should trade to. Okay, the direction of the market should trade to. And what do I mean? You might go, this might represent a 5 minute chart. Yeah, this might represent a 5 minute chart. And this 5 minute chart, as price was going down, it changed direction and then it went up, and then it got to a certain level, and then price did what? Reversed and continued to go down. So if this is a 5 minute chart, what happened here? Yeah, are you going to think that the 5 minute chart was up and then all of a sudden price went down, or what was going on? Okay, and that's the purpose of this lesson, understanding market structure. Because once you understand it, you can frame, right, any trade on any time frame and still get the main direction right. So let's clear everything. What I want you to understand is the highs and lows of every given time frame. A swing high and the swing low of every given time frame. Let's take, for example, this is a let me use the 4-hour time frame, right? So in the 4-hour time frame, we have a swing high and a swing low like this, right? This is representing a swing low, and then price makes a low high. Okay, once price makes that lower high, we look for what? A lower low to form. Now, because this is a 4-hour time frame, okay, if we drop down to the 1-hour time frame, you will see, or you're gonna notice, okay, that this drop in here is not a straight line. It might contain something like this. Okay, this drop on the 4-hour, on the hourly, might contain something like this, and then the push up on the 4-hour might also contain something like this. Okay, and then the next pull down on the 4-hour might also contain something like this. Not the best drawing, but I'll jump onto the main chart so you understand what I'm trying to indicate here. Okay, so so if we understand that this is a 4-hour swing, high, swing low, 4-hour swing high, swing low, then what makes the swing highs and swing lows inside this 4-hour, what makes those? And that's what we're talking about here, market structure. See, the 4-hour structure is bearish, okay, but inside the 4-hour structure we do have 1-hour market structure, and the 1-hour market structure can turn bullish whilst the 4-hour market structure is bearish. So if this is the 1-hour, right, this is not the best drawing, but let me redraw it again. Okay, something like this. All right, this is better. Right, the 1-hour structure might look like this. So inside the 4-hour, we went down. This is the 4-hour. We went up. Actually, let me overlay it here. So we went down, we went up, and then we went down. But on the 1-hour, it was something like this. And then we changed direction, and then went up, and then changed direction again, and then we went down. All right, so you can see the 4-hour market structure was bearish, but the 1-hour market structure turned out to go bullish, whereas the 4-hour was still bearish. So the 1-hour is bullish, and then the 1-hour got to a point between this high and that low, maybe the 618% retracement level or the 70% retracement level, and the price just did what? Drop back down. But on the 4-hour, it looks like a straight line. In the 1-hour, market structure went up and then broke again and then went down. Okay, so you need to be able to determine the major swing high on the 4-hour or the 1-hour. If you're trading with the 4-hour, you need to be able to determine, okay, where's my current swing high and swing low? And then once you're able to determine that, if the 4-hour is bearish, okay, you can take counter trend bullish trades on the 1-hour, but you're not looking for that 1-hour trade to go above a 4-hour high. Why? Because overall the 4-hour time frame market structure is bearish, is making lower lows. So on your 1 hour time frame that you're taking a long, you're not expecting that long to go above the 4 hour high, because the 4 hour is bearish. The 1 hour cannot overshadow the 4 hour unless the 1 hour decides to continue going up and then break the 4 hour level. Then you can now have a new structure like this. So the 4 hour will now be something like that, because inside the 4 hour, the 1 hour time frame trend has done something like this, breaking the 4 hour time frame structure. I hope that makes sense. So let's, with this illustration, okay, you can apply it to any pair, any time frame, right? The importance is understanding the key highs and lows. And another thing that you need to take notice of is, if the market structure is going to break on any time frame, you are expecting it to close above the previous high, right? So in here, let's say we have an up candle in here, right? The last up candle's close, right, is where you expect price to break or close above it. Price needs to close above this last up candle. When it's making a swing above it, it needs to close above it for you to determine that the market structure has broken to the upside. And the same way it is to the downside. So if we do have something like this, okay, and we have a down candle in here, we want to make sure that price closes below the down candle before we can determine that the market structure has shifted from going up to the downside. If it doesn't close and it uses a wick, okay, to come down and reject and come back up, all right, then that is not a market structure break. This could be a fake out or a run of stops and then a rejection to the upside. So it's very important to take notice of this, that for market structure to break on any time frame, there needs to be a close above the last up candle inside the swing high or the last down candle inside the swing low. Okay, so if we do have a market going down like this, for us to say, okay, the market is gonna continue going down, all right, for the market to continue going down, we need the next leg right here to close below the last down candle there. Once we do get that, the market structure is a continuation, is going to continue going down. Therefore, any retracement is subject to what? To sell again. Okay, any retracement is subject to sell again because we closed below the previous low. And once we do that, the market structure is bearish. And the same thing applies to bullishness. Okay, once you're able to close above the last up candle in here, then the market structure is bullish. If we do not close above it and we go up and reject, that is not market structure. It's not continuation. It might look like it, but it's not. So whatever time frame that you're trading, if you're trading the 1 hour time frame, if you're trading the 50 minutes time frame, if you're trading the hourly time frame, okay, if this thing does not close above it and it wakes and then go up and comes back inside, it's not a continuation. This is a fake out, and chances are it was a stop run, and then price will continue to come down. When it does come down here, this low, okay, might not support price. Why? Because for this low to support price, this high, okay, we need to close above it. This swing lows, the down candle in here needs to close above this up candle. The down candle in here needs to close above this up candle. And then once you do get that on the retracement, you can confidently buy with the notion that we are going to continue making a higher high. And if it doesn't close above it, this might be a trap, and it might come down, and then this area will support price for another leg up. Okay, because if this doesn't close above it, this low, it is not meaningful to price. It could be just a trap, and then it'll come back down, and then it will continue going back up. I hope you've got something out of it with this theory. And one thing that I needed to add on to is, if this is a 4 time frame, okay, the lower time frame can do whatever they want to do. It can go up, as long as it's within this high and that low. The 4-hour is still bearish, so this thing can keep doing whatever it needs to do in here, and which is what makes trading a bit harder. It can keep doing what it needs to do in here, okay, and this is where a lot of people lose money, because the structure because the structure is still bearish, right? It's not broken below or above here. Forget this down movement, okay? It's not closed above or below here. It's just going up and down in the lower time frame. Therefore, trying to be a buyer or a seller in here is just suicide. You're gonna kill your account. Yeah, you're gonna kill your account by doing that. Why? Because for us to be bearish or to be bullish, price needs to go above here, and for us to be bearish, price needs to go below here on the 4-hour. So if you do get, let's say, a 1-hour short, and then price comes all the way down and it doesn't break below this low, and it comes back up, chances are you're gonna think, okay, we've reversed and I'm gonna go long, and then you're gonna go long and price doesn't go above this, and then it comes back down, and then it stays in this area. And this, my friend, is where people lose a lot of money. Yeah, this is where people lose money. So once you're able to understand what I'm showing you here, once you are able to understand what I'm showing you here, okay, you can filter out when to be a buyer and when to be a seller. Why? Because you understand the structure, okay, the main high and then the main low, and which one we need to break. So if the market is screaming down and we get into a situation like this, where is the highest probability price is gonna go? Like if price is doing this, right, and then we made a low and then we made a high, and then price gets stuck in this area, what is the highest probability price is gonna go? Yeah, the highest probability will be to the downside. Why? Because you are making lower lows. Okay, so whatever happens in here, you're looking for the market to make another leg to the downside. If it does make a leg to the upside, then you can take this low, that high, and whatever lowest low is in here on the 4-hour, you connect them, and this will give you a market structure break to the upside. and then you can start looking for retracement and then a continuation on the 4-hour. Okay, this is very important, because once you're able to understand the market structure, trading will become, I won't say very easy, but you will be able to know when to get into a trade and when to stay out. Because once you're able to determine the high and the low of any market, and we are trading inside that range, you have to go back and find out, okay, where is my previous high and previous low? If your previous high and previous low are, let's say, higher, then we do have a down market movement. Therefore, your highest probability will to sell short. Yeah, your highest probability is to sell short. Okay, and then all you have to do is wait for the market to retrace in the high in the between this low and the high. If we've traded down, okay, and it's not breaking this, your highest probability will be wait for price to come above between this high and that low into the 61% retracement level, or at least the 70% retracement level. Above that is where your likely sales is going to form, and then you take a sell for a continuation to the downside to take out this low. Okay, that was a long-winded way of trying to explain market structure, but if you understand what I've just outlined here, okay, let's jump onto the chart and then I'll show you. Let's jump onto the 4-hour and let's use a currency pair, not the dollar. Let's use the pound, because we did have an example in here, which is what I did explain yesterday regarding why I'm looking for a sell on this trade. All right, so if we jump onto the 4-hour, okay, now you can see, okay, that we had a low here, we had a high, and then we broke down. Okay, so that is the beginning of a new downtrend on the 4-hour. Okay, so we connect the highs and the lows, we do have this, and then this low we made a high here and made a lower low, so it's what, a continuation. Then we made a high and then we made a lower low, continuation. We made a high and we made a lower low, continuation. So at this junction, okay, at this junction, what is the probable price direction on this time frame? Okay, the probable direction on this time frame is price needs to make another leg down. Okay, if we do form a swing low, price needs to make another leg down. So if you do go up, right, you are looking for a sell for a continuation to the downside. Why? Because the market is making lower lows on this time frame. Okay, so your highest probability is going to be to look for a retracement and a sell. Okay, but let's drop down to the hourly time frame. Let's drop down to the hourly time frame. Right, you see on the hourly time frame, let's click on there, click on here. You can see on the hourly time frame, okay, we have a different structure, right? Especially in here. Over here, it was just a straightforward price movement, But in here, this is when it gets trickier, right? Where we have our major 4-hour swing high, which is there, and our major 4-hour swing low, which is down here. So once we did form the low, okay, the 1-hour time frame broke structure right there. Yeah, we had a low, we had a high in here, and then we closed above it in here. Remember what I explained earlier, you want market to close above the swing high. So in here, right there, that's when the market structure on the 4-hour became what? Bullish. So on the 1-hour, we are bullish. On the 4-hour, we are bearish. Okay, so we made a low, a high, made a, we supposed on the 1-hour, we're supposed to continue going down. Okay, that will continue, that will be a continuation on the 1-hour and the 4-hour for continuation to the downside. We didn't do that, and then we made a high. So straight away, the 1-hour is bullish, but the 4-hour is still bearish. Okay, so on the 1-hour, we went up, came back down for retracement between this high and that low. Price came back down for we call it optimal trade entry or retracement to 618 fib level, and then it went another leg up. So when did the market break to the upside again? You find your highest up close candle, which is right here, and then you find out where market closed above it, right there. So right here is when we had a continuation on the 4-hour on the upside. All right, so in here we had continuation on the 1-hour on the upside, and then the market came back down for retracement and then made another leg up. Now once price got here, we are now in the upper portion of the 4-hour overall structure, which is this high and that low. Okay, so the highest probability is what is going to happen is that price is going to form another high on the 1-hour and then should send price back down. Why? Because the 4-hour is doing this. The 1-hour is subjective, is subordinate, or is below the 4-hour, so it's not supposed to overshadow the 4-hour unless unless this breaks this high, and that will be your warning sign that your 4-hour structure is breaking. Okay, your 4-hour structure is breaking, therefore you need to do what? You need to switch and go back to the 4-hour and then see, okay, the 4-hour is now broken structure to the upside. So let's say this is what I'm trying to talk about. So on the 1-hour, you have this price movement. Okay, once we do have that, you're supposed to switch back to your 4-hour and then see, did we close above the last up candle in here? Because if we did, probability is switched from selling to buying. Therefore, you're not supposed to be looking for sells, you're supposed to be looking for buys. So the 1-hour can now, after going above this, turn back down. Okay, and when it does turn back down, you are not looking for sells because the 4-hour structure is what? It's now bullish. So this 1-hour retracement, yeah, can cause price to do what? Can cause price to come back down in the 4-hour into a level and then look for another leg to the upside. Make sense? So you can see we did come up here, formed a high and then rejected, and now going back down. That is the power of understanding structure. Okay, that's the power of understanding structure. Once you understand structure, you'll be able to determine what you're supposed to be doing next. Are you supposed to be buying? Are you supposed to be selling? Are you supposed to be waiting for price to retrace, or are you supposed to be waiting for price to just continue on going up? Okay, let's get rid of all this, and then I'll go on to a different pair because this one looks too perfect. So let's go into a different pair which is a bit harder to understand. Then we can right, let's do this one here, and let's use this area here to understand market structure. Okay, so we did have a low and we had a high, and price closed below this low. Right, the fact that price was able to close below this low means that the market structure is what? Bearish on the 4-hour. Okay, the market structure is bearish on the 4-hour. If the market structure is bearish on the 4-hour, then we can look for what? Sells. Okay, we can look for sales. And this goes to if you want to let's say just trade exclusively a 4-hour, 1-hour, 15 minutes. Okay, so if you want to trade exclusively 4-hour, 1-hour, 15 minutes, okay, your 4-hour is your high time frame. You're looking at the direction of the 4-hour right here. Once we closed below this, immediately you're bearish, you're looking for sales. So all you have to do is wait for retracements to where? If you don't understand smart money, okay, you can use Fibonacci tool and say, okay, once we retrace to the 618 level, I'm gonna start looking for sales on my execution time frame, which will be the 15 minutes. Right, so if I just cut off this area, right, on the 4-hour, once price went below here, we are bearish. So you're waiting for what? A retracement. With this retracement, if you drop down to the 1-hour, you're going to see a different trend. Okay, so we had a low, we had a high, we had a low, and then we closed above this high. So on the 1-hour we are bullish, but on the 4-hour we are still bearish. Okay, we formed the high, formed the low, price closed above it, we're bullish. So on your 1-hour time frame, yes, we're bullish, but overall the 4-hour time frame is bearish. So your trade idea as a 4-hour exclusive time frame trader, you're looking for a sell. All right, so once price gets to your Fibonacci level, which is the 0.618, you are now looking for a sell. So how do you look for a sell? If your tradable time frame is the 15 minutes, okay, on the 15 minutes you are looking for a market structure break again. Yeah, how do you determine that? You want to find out your last swing low, you want to find your last swing high, and then you want price to close below the down candle on the last swing low as price is coming back up in here, right? So once price got here, you're looking for your last swing low. Okay, so where is your last swing low? In here, right there. We close below it. Okay, so you're now going to go in and start applying whatever you need to apply to start looking for what? A sell. Now you can, like I said, this is what makes it harder, because in this range, okay, price can still trade all the way up there and still be bearish. Yeah, price can still trade up here and still be bearish. Okay, so it doesn't matter what you're going to do. Whatever you do, the chances are there will be probability that you might take a hit, you might take a stop loss, a loss. But overall, you're supposed to be looking for sells in here in this range. Okay, so if you do have a pattern, let's say I trade what I showed you here, last up candles, okay, then I'll wait for price to retrace to my last up candle, and then I'll take a sell. If it doesn't, then I have to wait so it forms a swing low and then give me retracement to whatever, let's say 15 minutes optimal trade entry again. Okay, and then I'll be looking for sells up there. If it doesn't give me, then I'll continue to do it until I can entry. I hope you're getting the point. Okay, the whole point is you need to understand the structure of your time frame, your biggest time frame, and that will lead you into taking trades on the lower time frame for a continuation, whether to the upside or to the downside. Okay, so let's continue, play, and then see how price continues to do what? Go down. Yeah, overall you can see what this one is doing inside this range. Yeah, this is a 4-hour range, and then price will come outside the 4-hour range. Yeah, you can see we had so many different price directions inside here, but overall price did what? It went into a retracement of this range, which is your structure high, your structure low, into a range, and then made another leg back down. This is market structure. And you can do it for the reverse to the upside, which is you look for, let's go back, let's do a buy example. Let's look for a buy example. Let's go into a different pair and let's look at this one right now. And right in here we had this low, that high, retracement, we closed above this high, so we are bullish, came back for retracement, we closed above this high, so we are bullish, it came back for retracement, closed above this high, we are bullish, and then it went boom up. This goes retracement, we trade above it, and we are still bullish, and then we came all the way down. Okay, look closely, this is what I'm talking about. Is it a break or a run on stops? Okay, this is not a market structure break, it's a run on stops. Okay, it's a run on stops. It's to kill off the bulls that are long, and then a continuation to the upside. Okay, so how do you determine that this is not a break? Sometimes with the candlestick you will not see them. Maybe this might look to you that it broke it, get to the downside, so you'll be looking for a retracement and a continuation to the downside. So what I usually use is this line chart, because the line chart will depict true price action to you. Okay, so you will see that this high, that low, we broke, retracement, we broke, retracement, we broke, retracement, we broke, retracement, we broke, and then this between this high and that low is also a retracement. We never broke down, and then price is doing continuation to the upside, even though on the chart it looks like this. On the line chart, that's the true price action there. So it never went below this. The wicks you see is just a stop run, and then we look for a continuation to the upside. All right, so this, my friend, is market structure. Now you can apply this to any time frame. You can go on the daily and do the same thing. Just remove all this business. You can go on the daily and do the same thing. Okay, so we have a low, we have a high, we made a low, high, we made a low, high, we fail to make a low, and then we made a high. Okay, that's bullish. We came back down, made a low, we failed to make a high, and we made a low. So we've resumed what? Bearishness, and then all of a sudden, boom, we made high. We've resumed bullishness. So we have a low here, we have a high, and then we have a retracement, and then we are looking for price to trade above this for a continuation to the upside. That's the power of market structure. So you can determine what you need to do inside every range, because the range is going to tell you the storyline. So between this high, sometimes that's what makes trading our concept a bit difficult, because it's between this high and that low, price can come all the way down here and still be valid for a continuation to the upside. Right, price can do whatever he wants to do in here, right? And during this time, that's when I experience a bit of difficulty with my trading. Why? Because it's hard to read what it's going to do next. Okay, so if you understand what I'm saying or what I'm showing you, then when we do form a swing high, okay, you want price to most of the time retrace to at least 50% of the range. When we are long, as soon as we form a swing high, you stop buying, and then you wait for price to retrace to what? At least 50%, and then you start looking for market structure break again for a continuation to the upside. Okay, and then if it doesn't break, it is still valid for long because you are still within this range. Okay, and then the same thing applies to selling. This is buying. Let's look for sells. The same thing applies to selling. We had this low and that high. So once this low was broken, okay, traded below, we are bearish. We look for sells retracement. We look for what? Sells to come and take out this low, and then we made another low. We push back up. You look for sells for continuation. Push back up. You look for sells for continuation, and then you can see all of a sudden we changed direction. So once we've changed direction, retracement, we look for buy. Retracement, we look for buy. Retracement, we look for buy until we break below a low, and then we switch again. Okay, so hopefully this lesson has given you a bit of insight as to understanding market structure. Right, cool stuff. Now if you do have a pair recommendation you want me to look at, send it, and then let me have a look for you, because I'm still working on my mindset, and my judgment might not be accurate. So send me your pair recommendation. I'll have a look at it for you, and just keep what we have already with the with this one. Let's keep that one for now. And we did have New Zealand CAD and Aussie CAD as a swing trade, and we also had Swiss yen. I will explain why I've trimmed down the pairs maybe tomorrow. So going forward, I have trimmed down the pairs that we look for, or we look at. We almost got to the first TP and gave a retracement. So with what I've just taught you now, you can understand that the 4R is still what? The 4R is still bullish. So this is just coming for what? A retracement, and we look for another leg to the upside until it tells us the opposite. Okay, so keep this one as well. And pound yen, I said look, wait for price to close above this. That's the reason, and that's what I've just taught you now. Okay, wait for price to close above this. We've now got a close above it, so you can start looking for the longs for the upside objectives that I gave on this one. Let's have a look at what oil did, because I did see something on oil. WTI. Notice WTI. Which one have I been using? It's this one. I've cleaned out the longs was from, it's coming from this right here. I've talked about this several times. Anytime we meet on the daily, I did give the right there as the upside objective. So on oil, we are still bullish, right? We are not bearish, we're still bullish. CAD CHF. Okay, you can see I've taken it off. There's a reason. CAD CHF. Right. So if I apply what I've just taught to you here, okay. If I apply what I've just taught you here, what would you think price is doing? Let's go on to the daily. Right, we made a low, high, we broke down, and we made a low here. So we made a high, short-term high, and then we made a low, and then we've come back for retracement. So we are looking for what? Sells, but because it's a short-term retracement, the lower time frame is going to be bullish, which is the 4R and the 1R. Okay, so in here we are waiting for the 1R to turn bearish. You can sell as it's coming back up, but ideally you want to wait for market structure to switch, or if you see anything that resembles the rejection pattern that I taught you, okay, then you can use that as a tool to take a trade. So and that was the main purpose of the rejection. It gives you an entry before the market structure actually breaks. It's like you are ahead of the break in structure. So if we do form the structure up here, or if we did form the structure up here, then you can start taking that sell, because that's a bearish pattern. You can start taking that sell in anticipation that we're going to continue going down. But right now we need to take out this low. Okay, that's what I said yesterday. We need to take out this low for us to continue going down. So until this low is taken, we have to be patient for the continuation to the downside. If not, then we wait. Okay, so there's nothing to do on this right now. It's just patient. If you're still short, I mean, keep it, because the daily time frame is still bearish. If we trade above this, then I'll say, okay, the daily trend has changed, so we need to start looking for buys. But until we get that, the daily trend is still bearish, so you look for sells. I hope that helps. Any other pair? Let's look at CAD yen. I did have something on CAD yen yesterday. Again, taking CAD yen off. Yesterday I did have this level up here, and I said watch that one, because that's the last. These are the two last up candle before all this move down. Remember what I've just taught you now. Okay, we are what we have a high, so we have a low, we have a high, and we broke down. So the market is what? Bearish. So if it's bearish, we need to wait for retracement. If we form a swing high, we have to wait for retracement, and the retracement, we will be looking for a sell here, whether in this last up candle, okay, or above 50% of this range. Okay, above 50% of this range. We are currently above it, so we have to wait for what? Market structure break. But I did like the level up there here. That was the candle I was interested in. So I said, if you want, okay, you can, because it's not a big stop, you can take a short up here, something like this, and then you can hold on to it, because the market on the daily is bearish. So there can be a potential we can swing all the way back down in here. Now that I've given you a bit of insight into market structure, you can understand why I will look for all this move back down. Yeah, and if it doesn't, no problem. But if it breaks market structure on the 4-hour, which is down here, on the hourly, I think it has. Oh, actually, it hasn't. Not. No, we need to take out this low. Yeah, it hasn't taken out the hourly structure yet. But if we do break the hourly market structure, then there's a potential, right? There's a huge potential we can come back down to at least down here. Okay, there will be a potential that we can at least come back down there, and once we get here, we can take some of our position off and then look for what price is going to do next. And what else? I think that was it. Yeah, you can keep holding on to it. I mean, you're short from up there, so keep holding on to it, but watch it closely. If it does break market structure on a lower time frame, okay, you can still look for sells again and add to your position. I mean, today's session, right? This is like everything you need to know about trading. If you understand this, you're done. Everything should be, the rest should be patient, and the rest will be patient and mindset. Your mindset is what is gonna hurt you, which is what I'm going through right now. Okay, there will be times that I'll do a different session on mindset, psychology, and journaling, maybe tomorrow. Okay, I'll do mindset, psychology, and journaling tomorrow. And the king is awake. The king is awake. All right, any questions so far? Any questions so far? This is a beautiful trade, but again, my mindset is not right, so I'm not there to take it. The trade I did, like this morning was dollar CAD. This one, okay, and I'll give you the background of why I like this one. So dollar has come all the way down. Remember, I taught you about this equal highs, right? They engineered this equal high, and then they've come all the way down and taken at this low, and then rejection. That's one. Okay, so what does that give you? Remember, I said they might be engineering this for Friday, which is NFP. They might be doing that. Yeah, they might be doing that. It's typical, right? So now that they've come all the way down and rejected, what does that show you? It's, to me, it's prompting me that this is the next target. This is the next target. Okay, so if this is the next target, let's go into dollar CAD. Not this one. Come on, be on job. There it is. Okay, if that's the next target, what did I talk about regarding this level? What did I talk about this regarding this level? If I drop down to the 3 months time frame, I'd give you what? The opening price of this last down candle, right? And price did get there yesterday. Yeah, price did get there yesterday and gave a rejection pattern, which is this last down candle and this last down candle and this last up candle. So price came all the way back down, and now let's drop down to the hourly time frame. Okay, and then what I've just told you, structure, market structure. Between this low and that high, we need to break this low for a continuation to the downside, right? We didn't. We went down, now broke it up. So what does that give you? It gives you upside movement, right? If that gives you upside movement, and we have the dollar in preparation to take out this high, I'm just giving you a background of why I'm expecting that kind of trade. Yes, we will do that. Absolutely. It's crucial. I don't want to go into it because once I start, I won't stop. Once I start, I'm just gonna rant. I'm gonna talk about it forever. So let's not jump into it now. Okay, so the reason why I like this, okay, is I know every market every market condition is unique, right? Every market condition is unique, but you do have repeating phenomena that you can say, okay, there's a high probability that price is gonna do this over something else, right? And that will come inside the psychology session I might do tomorrow. So look at this consolidation. What did I tell you about them? Consolidation, move to the downside, rejection to the upside. If we go on to prior to when this market changed direction, yeah, we had this consolidation, price moved down, rejection, and now we are going up, right? Let's go on to pound CAD. This one is the one I'm interested in. Look at the consolidation and move down, rejection, and then look where we are right now. Now let's go back to CAD. We have a consolidation, move down, rejection into a high time frame level, rejection, and then we are coming back up. So what does that tell me? If I remove everything, no, not everything. Right, if I remove all that, go into the 4 hour, you can see it properly. What did I tell you about consolidation and consecutive down candles without no up candle? Manipulation, right? So if I do my manipulation projection, just not this one here, if I do my manipulation projection, okay, this can be my first target, second target for now. Yeah, for now this can be my first target, and the reason why I like it is because I'm buying very low. So if I'm wrong, I'm wrong, okay? But the probability of this happening with what we have in the dollar, okay, I like this one, okay? And I could be wrong and it can just turn around and stop me out, no problem. But at least I'm able to stack. Okay, let's say this is a casino. I'm able to stack the probability on my side. Okay, so the chances of me being wrong is 1. The chances of me being right is what? 6. So if I'm right, I'm 6 up. If I'm wrong, I'm 1 down. No problem. Do you understand? Okay. So I'll leave you with this one. Decide if you want to take it. Is there. I might send it to the group later on, but they wouldn't understand this now, but they will understand it once price trades above this and is about to make these 2 targets. But let's see if the dollar will continue to push higher, okay, which is what I'm looking for. They've run the stop, they have equal highs in here. I mean, that's all I can think about. This high is what you're coming for. So if they're coming for that, then this will be at least, if I'm gonna get to there, yeah, that will be almost 2 to 1, right? And let me take a picture of this. And let's save it and send it across. Let's see if we do get that. Let's post it. People can take advantage of it. And actually, I didn't put TP1, TP2. Let's delete that for now. Let's add it to it. TP1 and put TP2. TP2, TP3, and voila. And send this one across. Direct message. There we go. So I'm gonna end here, okay, and let me go back and work on my mental state, my mental health being for now. Do you have any question before I disappear into the unknown? On the Aussie card, we have the idea for sure, but if you have, it doesn't matter, Marco, and that's one of the reasons why I've taken most of the pairs off, because sometimes there is good trades on the pair, but because we have conflicting, it's a mindset trick, right? It's a conflicting thoughts where, okay, because this is dollar card and dollar card is gonna go up, then Aussie card should do what Aussie card should go up. It doesn't work like that, and that's why I've taken most of it off. It does play a little bit trick on you, but this might stay sideways for now. Remember, I said this is a swing trade, and with the lesson I've given you today, you appreciate why I'm looking for a continuation to the downside. Okay, we've broken the 4-hour trend, so we have formed a low. Sorry, we have formed a low and a high, short-term high. So we're looking for a break for a continuation to the downside. So this might stay in here for a while because it's a swing trade. They've given all this manipulation on the upside, and that's one of the reasons why I gave this trade as well. Remember the manipulation, okay, consolidation, manipulation, rejection. So we can do what, project these up candles to the downside. So we are currently trading at the 127. Okay, so we're looking for a push to the downside. If it stops you out, it doesn't mean that we are going up. It just now that you understand market structure, you can go in and it's okay, this is a high, that's a low, so we can do what we can trade inside this range. But another lesson that I'll do, there is something in here that stops price from going up, and if that breaks, then we look for push above here. So we are selling this one first, and if this stops us out, then we look for a sell above here. Okay, it's just structure, it's a protocol. So yeah, dollar card can go up, this one can stay sideways. Any other question? You're welcome. Right, thank you for coming. Always be here, you're gonna learn. Right, always be here, you're gonna learn a lot that will change your understanding of market. Okay, so I'm gonna end here, and then I'll see you. Maybe I might do the session I was supposed to do yesterday on YouTube, maybe this afternoon, depends how I feel. Alright, so I'll catch you guys later. Take care.